Mahesh Patil as well joins in on the show from Aditya Birla Sun Life AMC. Mahesh, hi, morning. Historic week, stepping into a historic month. What's the market construct looking like to you?
Yeah, good morning. So, yeah, I think this month has been fairly good, right? We have seen after the positive results from the electoral in the state elections, I think the markets have taken a slightly positive outlook that, okay, I think the election outcome would be slightly favorable. And globally also, we've seen that despite all the other concern growth slowdown, we've seen a decent amount of rally. And also, I think the good news is that inflation and other concerns, okay, which bothered us for all throughout this calendar year, seems to be easing off. And also rate cuts, okay, in the US, okay, you could see it sometime probably earlier than what we were looking at earlier. So all in all, I think the market overall flows-wise, if you look at, has turned positive. And on the domestic side, we think that things are still fairly steady. A lot of the sectors, okay, which we are looking at have, even after the second quarter numbers, have shown a steady improvement, except barring for a few sectors like consumer discretionary. But a lot of the domestic sector focus are looking good, especially the kind of rally what we have seen in the industrials, capital good, the power stocks. I think this sector, again, is one of the backbone of the economy. And if that is starting to recover, then I think you could see the broader market also sustaining. But I would say that the recent rally, what we've seen is primarily been in the large cap space, which was kind of lagging behind. We have seen a good amount of money flow in the mid and small cap space. I think that seems to have turned around again. There's some catch up over there. But overall, I think as the risk concern starts to abate a bit, I think clearly the Lagarde sectors which were there, I think they are starting to now perform.
Mahesh, so do you expect markets to stay firm in the run-up to the election?
Yeah, I think given the current sentiment as we move into the next calendar year, right, you could see now fresh allocations, right, from the FIIs. And I think looking at the situation, I think they could take a slightly positive view over there. So you could see the allocations could increase in the first half of next calendar year. And with the strong domestic flows which are coming, I think you could probably see the markets getting into elections slightly on a positive note. And also, as I said, the expectations of the government current policy continuing, I think are much on the higher side at this point in time. So I think this movement could continue. And later on, depending on how the global economy reacts, okay, how do we see the US recession pan out? I think then the markets could probably take a turn from there.
Okay. Right. Mahesh, so what's the strategy going to be from now up until election next year? As a fund house, are there some tactical positions that you're going to be taking? Market cap allocations, maybe book out of small and mid cap spaces a little bit, be more into large caps, also because of the underperformance year to date, vis-a-vis what the small and mid cap spaces have done. Are you taking any of those calls?
Yeah, so I think we are not taking any major call on the election outcome. I think we did not really bother too much about it. I think sticking to our core really in terms of doing a bottom up and sectors, okay, where we think would continue to do well irrespective of the election outcome. I think that is something which we'll be focusing on, and that's been our strategy for some time now. Again, on the large cap, I think we have been slightly recent. The risk reward on the large cap looks slightly better at this point in time. And even in case of market volatility, I think that's where I will find more comfort. So clearly, a tilt towards the large cap stocks is what we are doing in our portfolios. Having said that, I think in the mid and small cap, we are not too worried over there. I think there could be some period of consolidation over there. Again, within that, we've seen a good broad-based rally year till date. And it's a time where some of the weaker companies in the small and mid cap space, the tail positions, is where we would like to consolidate in this rally and focus on really the stronger companies, because I think that should hold us in case there is a volatility interim sometime next year. And amongst the sectors, clearly the domestic facing sectors, like, for example, auto sector, where we think that, we've seen a steady improvement over there. Margin outlook looks good. And recently we had launched the auto fund, which also had a good response. And other domestic sectors, whether it is the real estate sector or the industrial sector, where we think the whole investments cycle, which we think actually will post-elections, is where the private sector capex could actually gain momentum. And a lot of the industrial capital companies could see steady improvement in the order book going forward. Apart from that, sector like pharma, for example, which is more defensive in nature, has relatively underperformed, has seen a good traction. We've seen domestic pharma growth has actually outpaced the expectations. And the whole healthcare space also looks good. So some of the defensives, which have underperformed, could also be sectors which one should be looking at this point in time.
Morning, Mahesh. I wanted to also understand your outlook on the PSUs, because the perception has changed quite a bit. You've also see overall, it seems like to a great extent the business models have changed, and a lot of these companies have already delivered. Keeping in mind the kind of valuations that they command, what's the outlook on PSUs?
The PSUs have been spectacular rally this year. I think we have a PSU fund which has given more than 40% return. So clearly, this has been a year of the PSUs, and again, it's not only re-rating what we have seen, but some of the PSUs have also shown a good growth compared to what they have done in the past. And again, a lot of these PSU companies have been a core to the economy, and whether it's in the power sector, railways, defense, where we have seen the overall outlook in terms of growth investments has actually picked up. So I think some of these PSU names have run up quite a bit. So one would be slightly cautious, especially in sectors like, for example, defense or railways. But by and large, I think the overall PSU pack, if you look at it, it's still reasonably priced compared to their historical levels. They would probably look slightly on the higher side. But in absolute terms, if you compare with the broader market, the valuations are still reasonable. And I think where specifically the growth outlook is strong, I think one can still be invested. And though I would believe that with the run-up, what we have seen in the PSU stock and the use appreciation, the government could probably want to monetize some of these things, especially by the end of this fiscal. And that supply, I think, could come in, and that could probably lead to some kind of capping up in some of the PSU names.
The other space, Mahesh, where there's immense curiosity and FOMO feeling as well, has been power. I wanted to understand where within power do you still find value, if you are still recommending jumping onto the bandwagon?
Currently, I think we've seen in the power sector, this has been a sector which has probably been, not done much for many years. And the last, 1 year or so, we've seen heightened activity over there. Again, leading from the fact that, after a long period of time, we're seeing actually now capex intensity in the power sector starting to move up because of the underinvestment, what we have done, especially in the thermal side. The peak deficit has kind of gone up, and then we need to really step up our investments over there, both in coal as well as in the renewables. And that is seeing a lot of interest back in the sector. But I think some of the rally what we've seen has probably slightly gone ahead, because this is a sector where it takes some time, right, in terms of you decide plans and start to execute. It's a long gestation period. So while the overall outlook in the sector looks good and is improving, I would say one needs to be a bit cautious over it. I think it can still be a good, steady, especially the power utilities it could still be a space where you could still look at it where there's still value. Though again, I would say compared to the recent historical multiple, it's in the highest. But if you really look at during the peak when the sector was, if you compare to that level, then probably one can say there is still some upside there.
Okay. Mahesh, why have crude and bond yields come down? We can look at, say, okay, great news, but isn't that an indication of some recession is around the corner?
Yeah, I mean, so obviously oil prices, okay, there are multiple other determinants there in terms of how one is the demand side of the equation and also on the supply side. So I think market is already trying to factor in that you will see some slowdown, especially in the US. The debate is whether it will be a soft landing or you could see a hard landing. But where the inflation is kind of trajectory is, and with commodity prices also coming down. So I think if that is the scenario, if it is the rate cut is more led because of, or rather the expectation of the bond is coming down is more because of inflation trying to come under the control and the target which the Fed has, then I don't think it's something to be worried about. But I think that to some extent, I think looks to be the reason why the bond yields have come off. It is also expectation that inflation expectations are likely to be much more lower than what it was expected to be earlier. So while we say the slowdown concerns would definitely be there, but I think that is something which the market, at least the broader market, is, I don't think it is expected to surprise negatively more than what the current expectations are.
All right, give us a sense as to what the outlook is when it comes to the overall earnings momentum, because we've been talking to some experts and they say that perhaps there could be a concern when it comes to a slowdown in numbers within the consumption space. Are you worried?
So, I mean, some of the commentary recently from after the festive season, we haven't seen material pickup in consumption, which was expected, especially on the rural side. And that could lead to some kind of dampening in terms of expectation, especially on the consumer side. You're right about that. But I think in the consumer space, while the top line growth will still not probably be as high as one would have expected, the recovery is still slightly slower. But on the margin side, I think things are still looking pretty good there. The growth in the bottom line would be driven by margin improvement, and that has been aided by fall in the commodity prices, both in terms of crude and even other food prices have also kind of come off. So I don't think there should be major concern in terms of the earnings growth or downgrades to earnings in that sector, because the margin lift will probably take care of 1 or 2% slowdown in the volume growth which could happen over there.
Okay, Mahesh, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Thank you.